the next few weeks, the next 3 sessions are going to be an overview of each of the primary buckets to build wealth. So we said, what are the main ways to build wealth? So I'm going to ask that question out to you guys. What are the main ways to build wealth? Let's ask Caesar. Give me one main way to build wealth.
Real estate.
Real estate, definitely.
Nice.
Veronica, what's another one? I'm just calling out pictures that I see here.
Business.
Business, starting a business, investing in a business. Yep. How about one more? Let's see. Nicole. She's been coming to a lot of the classes. Have you been paying attention? What's another way to build wealth? We got real estate, we got business. What's another major tool? I think she's muted. Joey?
Mutual funds.
Mutual funds? That's a good one. And what general area is mutual funds in?
Yeah. I don't know.
So it's part of the market, right? Like the stock, those kind of instruments, like the stock market and those type of assets, like things that you trade back and forth. For the purpose of this class, we are lumping anything that you trade in that manner into that category. So that would be stocks, crypto, mutual funds. There's a lot of assets and things that you can purchase. So what we're going to do is do one overview on each one of those, and just to expose you. I know for some of you may not like it, may know a lot about it, may know very little about it, but we want to just give an overview in each one of those areas. So today we are going to be talking about the stock market and a little bit of crypto, and just what does that world look like in terms of if it's something that you guys want to invest in. Further down the road, if you do want to learn more about that, we're going to have more of the practical lessons around it, how to trade, what tools, getting them into all of that. But today I'm going to give a nice overview and answer any questions that you guys may have around that. So that's kind of the little preview for today, and then we'll do one for real estate and then one for business as well. All right, Nico, it's all
Awesome.
you.
Yeah, it's gonna be awesome. Okay, so last week we did a little would you rather, and it was pretty fun, and hear some of your guys' answers. So I thought we could continue. So if you have a video camera for your computer, go ahead and turn it on. If not, you can type in the chat, and I'll see what your answers are. Okay, so here's the question, the would you rather question. We're gonna answer it 1 or 2. So if you're a video, you can hold 1 or 2, or type 1 or 2 in the chat. Here's the first question. Would you rather have the ability to see 50 years in the future or 150 years in the future? Okay, a lot of ones. 1, 2. Okay, Pablo, you can start. Why 2?
You're asking me?
Yep.
I would be very curious to just see, I do think about the future quite a bit and plant a lot of seeds. So I'd like to see what happened with those. So I'd like to see how things evolved.
Okay. Let's see.
Anna says, of course, Pablo picks 2.
Yeah. Beto, why number 1?
Because I would want to be alive to see what's happening and like what happened in my lifetime. And yeah, I mean, I could see why 150 you would be several generations ahead. So, but I think I would want to
See your
see
life, your own life.
Yeah.
Okay. Let's see. Patty, you said 2. I would love to hear why you picked 2. I don't know if you're muted.
Okay, I got my mic.
Okay.
Okay. Yes, I would like to see what my grandchildren would look like. And what would they be investing in?
As adults?
As adults, yes.
Yeah, that's cool. Nice. Okay. Here's the next question. Would you rather find true love today or win the lottery next year? One or two. Let's be honest, people. Let's just be honest. What we got?
Wait, I missed it. What was it?
Would you rather find true love today or win the lottery next year?
That's assuming that you don't have your partner.
Assuming you don't have your partner
Yeah, that's what that's
and,
what I.
and you're lonely.
Yeah. Micah says I'm going for the cash. Won't have a problem finding true love after that.
Comes even harder.
Yeah, I think it does get harder.
Micah, why the cash?
Well, like you said, if you've already got somebody, then the question kind of gets tricky because then you're kind of saying like, is it a trade-off or something? But I think I'm just saying, you know, this is all about the money, this discussion. So we'll just go for
We'll just go for the
the
cash.
cash grab.
Nice. Jessica, why number one?
Okay, so this is hard for me. But I chose two at first, but then once you said, you know, assuming you don't have your true love. Because in the end, to be honest with you, like as long as you have something that like you're, you know, passionate about someone and sharing your life, like I think you could do it anywhere and with any amount of money. So honestly, it's just about friendship and love in the end. So
Good.
Nice, sister.
this is just a cherry on top, baby.
Nice, sister. Okay, good stuff,
Way to
guys.
go, Jessica.
All right, last question, and then we'll start the lesson here. Would you rather have telekinesis, the ability to move things with your mind, or the ability of telepathy, and the ability to read minds? Wow. Wow. Okay. You guys would want to read people's minds. It's so crazy. Okay, Rebecca, why number two?
I think it would be just easier for me to make a decision on, like things like if these people are out to hurt me or out to, like, I don't know why. I just always think of like the good in people, but it would also be good to see the bad just so that you don't get into bad business, bad relationships, stuff like that. Just kind of like to protect yourself a little more.
Oh man. Okay.
I would see the closest thing is just get married. They'll tell you. They'll just tell you what's wrong. You'll know real quick.
That's true.
Nina, why would you want to move things with your mind?
Because I'm lazy and I don't want to get up.
Ooh, okay. Keep it simple.
Yep.
That's funny.
Theo, what'd you pick?
I did not catch the question. So the first part of the question. So I'm sorry.
Would you rather move things with your mind or have the ability to read minds?
How it depends on how much you can move with your mind. Like if I could move cars and heavy
Yeah,
stuff.
move cars, move
Oh,
anything.
really? Oh,
Yeah.
wow. You're giving me unlimited power.
Yeah, you're Magneto.
Yeah.
Or
Wow.
Professor X.
I would probably like number one better.
Me too.
Yeah. Because then I could move. Yeah. That would be.
Pretty
Yeah,
fun.
Yeah, pretty fun because the other one, usually people tell me. I mean, I get it all the time. But
That's true.
It's not very creative. I mean, I'm sorry. We all struggle with the same problems, and so I've seen so many. So probably, yeah, moving things would be the best for me. Yeah.
Cool. Awesome,
Super
guys.
Caesar.
Good answers, guys. That was fun.
I've been watching the Avengers. Probably that's why.
Yes. Cool. Thank you, Nico.
Yep.
All right, guys. So today, I'm excited about this topic because I really enjoy it a lot. So we're going to do an overview of the stock market. And this may be, we're going to take it very easy, guys. So, you know, we're going to go very high level and answer any questions. I'll send these graphics out too. I got a bunch of different graphics, but we're going to make it nice and easy and just go over the basic concepts. So let's start right at the beginning. What the heck is the stock market? I'm sure you've all heard of it. You may have heard on the news, the market is up, the market is down. What does that even mean, right? So the stock market, in fact, is a market. So what it is you can buy and sell all kinds of stuff. Most people know that you can buy or sell shares of companies, right? So that's the most popular, when you think of the market, that's what you think of. So when a company goes public, that means they're going to go on one of these marketplaces, an exchange, and I'll get into what an exchange is in a second. They have to apply by all these rules, and it's a lot of paperwork because it's very, very technical. They have to know how much money you have, how you're doing. It needs to be very fair. So this is a very fair marketplace, you know, in terms of the data, and you have to present how your company is doing to all the investors out there. And you have to report on this every 3 months, and they call it an earnings report. So the way it works is you're a company. I'm going to zoom in here. You're a company, and you can divide your company into shares. So the little pieces of the company that you divide up are called shares. And every company has some number of outstanding shares. So let's do a very quick version. Let's say that Micah starts an investment company, right? And he gives, and he's valued at, let's just say $100,000, okay? And he gives out 100,000, he decides that his company is going to divide in 100,000 shares. So what would be his stock price? Anybody? You can use your mics if you want. We're a small enough group. $1, that is correct. So what that means is all of the shares, if you were to add up all his shares times $1, that equals the value of his company. That would be $100,000. So let's say that Micah now, in 3 months, you know, his sales are through the roof. He's tripled his business. Things are just rocking and rolling for Micah. And in his next earnings, he said, you know I said we were going to make, you know, 250 grand this month, but we did like a bunch of flips and we bought these other things at really great prices. So we actually made 500,000. What do you think is going to happen to Micah's stock? Do you think more people would be interested in buying it? Absolutely.
Yeah.
Right?
Yes.
So his stock's going to go up. So let's say his stock goes up to $2. How much is Micah's company now? What is it worth?
200,000. Right?
200,000. So
He's killing it.
that bit, yeah, he's killing it, right? He doubled his valuation. Now, let's say you were an investor with Micah and you put in $10,000. How much is your investment worth now? $20,000.
20K.
Exactly. So you made 100% return on your investment. And now you could decide, hey, do I want to sell to somebody is willing to pay $2 a share for Micah? And then, you know what? The next earnings comes out even better. Now it's $2.50, $3, and Micah's just crushing it. You're like, you know what? $3 and I'm out. I'm going to take my $30,000 and $20,000 profit, right? My initial $10,000, and I am now taking out $30,000 back. Thank you very much, Micah. I'm going to go find another company to invest in. That's some people can do that. Other people will say, nope, I'm riding with Micah. I'm gonna keep holding. And Micah may decide to give back what's called a dividend every 3 months. A portion of Micah's profits, he's going to share it back with his shareholders, and that's called a dividend. And that's usually called a dividend yield. It's a percentage, and it's like it can be an annual yield of 3%, 5%, 4%. Every company is a little different. For example, Apple gives 1.5%. It's not too bad, not too high. But you know, AT&T or Verizon may give upwards of 4 to 5%. However, Apple also grows much faster than AT&T and Verizon, so you have to take that into account. But the point is that there's a bunch of people out there, and you can buy all kinds of companies on these markets, right? And so as an investor, you can look at businesses that you like or that you believe in, and you can buy shares and be on all technical terms,
An
You are
owner.
a co-owner of that business. You are supplying capital and helping that business operate, and also you are trading with other investors. So in this model here, this broker is where an investor says, yep, I want to buy money, let's say, into Micah's company or Apple or whatever company that's a publicly traded company. And then this broker is the one that's going to be the middleman and say, I got the money for $2 and this guy wants to buy it for $2. So I can sell it or I can buy it, either way, and it goes through a broker. Back in the day, those guys that you guys see on the Wall Street that have the little mics and the books, and those were the physical brokers. They would get the calls and do the exchanges. Nowadays, these brokers have been completely automated, and there's almost nobody in those exchanges anymore. It's kind of, it kind of really changed. So the brokers now have become platforms like E-Trade, Robinhood, Fidelity, a lot of different platforms, or crypto would be Coinbase, Bittrex, all these other exchanges that are out there, Binance. So the broker has really been automated in this case, but the process is still the same, okay? So that's the basics of stocks is buying and trading shares of companies at different prices. And it happens all day long. There's times to the market. It opens at 9:30 a.m., closes at 4:30 p.m., actually 4 o'clock p.m. So the market is open for those hours, 9:30 to 4 Eastern time. That's always the time. The crypto market is open 24/7, which makes it crazy. It never closes. You can always trade 24 hours a day. You don't always have to buy stocks. You can also buy commodities. You can buy gold, lumber, aluminum, silver, corn, whatever the heck you want to invest in, you can buy it on the different exchanges. So the different exchanges, think of them like different stores. Like, that you can buy certain products at one store and then different products at another store. So just like that, you can buy some products on the NASDAQ exchange, other ones on the New York Stock Exchange. These are US-based exchanges. You can also buy on foreign exchanges like the Nikkei, which is, the Japanese exchange. You can buy on a lot of different exchanges around the world depending on what you want to purchase. And like I said, same with crypto. Some exchanges have some coins, some exchanges have other coins. So think of it like the exchange as a store, and also in this case, acting kind of like as a broker in many instances. So basically, this is the 101 of the stock market. I'm going to stop right here. Any questions so far, just on the basics on how this works? No? Okay. So what type of products are there? So there are individual stocks. For example, you can go and buy one stock of Apple or one stock of Amazon, right? One share, just one individual share directly from that company and own that in your portfolio. You can also buy an index fund, or they call them an ETF. And those are a collection of different individual funds all mixed together. So for example, the most famous index fund, I'll ask, do you guys know what the most famous index fund is? Or maybe some of them? You can put it in the chat. S&P, that's great. So the Standard & Poor Index Fund, S&P, it's usually called the S&P 500, and it's a list of 500 companies that are represented by all kinds of industries that are fairly good companies. Like, to get into the S&P, they have a particular criteria. You have to be doing great.
Top dog.
So and so the S&P is a representation of 500 great US companies. The Dow is only 30, and those are mega companies. These are large cap, they call large cap. And what that means is market capitalization is when we said that Micah's company was worth 100,000, when you add up all the shares of a company times their stock price, that equals market capitalization. And it's a general term for what that company's worth, okay? So if you have a very high share price and a lot of shares, your company's gonna be worth quite a bit, right? The Dow has 30 very large market cap companies around every industry. And the reason why they do that and people invest in it is because imagine that the airlines got hammered, right? Like what happened with COVID. But then the tech stocks did really great. So one goes down and the other ones pull it up. So it's really hard for the S&P or the Dow to completely tank, because that would mean what would have to tank?
The
What
whole
would have to
market.
tank for the whole thing to tank?
The whole market.
The entire market, right? Basically the economy. So when you hear on the news and they say the market was up, the market was down, more likely they are speaking about the S&P and or the Dow, or maybe just the Dow, or the S&P. They'll say that the S&P was up, the market was up. That's what they're referring to. And the reason why that they say that is because the stocks that are selected in there, the companies that are representing in those funds, really are a good representation of our economy. They have from biotech, health, technology, transportation. There will be representatives of every industry in this one fund. So,
Pablo, I had a question.
Yep.
Okay, say I had like unlimited resources. Could I like technically buy Apple if I had enough money? Or do they only put a percentage of their company as shares?
That's a great question. So some of the greatest investors, such as Warren Buffett and Berkshire Hathaway, which is his company, that's exactly what they do, right? So they buy companies out by owning a large percentage of their stock. So you can absolutely, if you have a lot of money, you can buy a good chunk of somebody's stock, and then
You're the majority holder.
You could be a majority holder. Warren Buffett is that for I don't know how many companies. I mean, just maybe 10 or 15 companies. He's the majority, like Gillette, Geico, Coca-Cola. Now he's the largest shareholder of Apple. So he invests in companies and likes to take that kind of position. Banks, he was the largest shareholder of a lot of banks and airlines at certain points. And of course you can trade them. And when you're at that level, they give you a call and they'll let the company know, hey, Warren Buffett's looking at your company. And somebody like Warren Buffett, a class act, you're going to be happy. But there's also people that are bad actors that may want to take you over, and that's called like a hostile takeover, where you're taking over just based on their shares, and that could be a negative thing. That's when a company wants to take out another company, for example.
So
there's a lot to that.
Sorry, when you're a majority stakeholder, you have you can start making decisions for the company, right?
Yeah, that's based on the stock that you own. You're getting kind of into some specifics about preferred stock and what type of stock has voting power or not. Traditionally, the stocks that are sold on the market, like to the average investor, like to us, we wouldn't get those kind of rights. Sometimes you would if the company is very small, but in general, you're just like a regular shareholder, But for example, if you get a class, they have like classes like class A, class B, preferred stock, different types of stock that you can buy, and it gives you different rights.
Cool.
So that's kind of how it works. So let's dive into just looking. I want to show you guys another thing. The price, and I'm sure you've seen the tickers and maybe candlesticks. So I want to show you what that is. Has anybody ever seen a chart that looks kind of like this? I'm going to zoom in here a little bit. Has everybody seen something like this?
Yes.
So this is called a chart, candlestick chart pattern. And let's look at what each little candlestick does. So just so you don't, because this, if you're looking at it for the first time, it just looks like a bunch of green and black and red squares. Like, what am I even looking at, right? What it's tracking is the price over time. That's what we're tracking. We're tracking time here in the bottom and price on this way, okay? And so you can see that currently the Dow Jones, where that's what we're looking at, the Dow Jones is at 34,196. It's already closed for the day, and that's the price of when it closed. So let's learn how to read a stock, a candlestick. So when it's green, it means that when the market opened at 9:30 a.m., the price started here. By the time the market closed, the price was here. If it was green, that means it went up, and this is where it closed at. If you have a little wick, they call it a candlestick wick, at some point in the day, it got to that high, but it ended up closing here. And at some point in the day, it got to this low, but at some point it closed up here. So what this tells you is a very quick view of the price action for that day. So at some point it was down here, but by the time the candle closed, meaning at the end of the day at 4 p.m., it was up here. The opposite on the red, it started at the top and it went down over the day. That's why it's red. That means that that stock lost, it closed lower than it opened. And then this was the high of the day and the low of the day. So taking that information, let's look at this current one here. And you can also change what each candle represents. So is it a day, a month? Right now I'm looking at 1 day. Let's look at a 1 day. So this is, each candle is 1 day. So you can see we had a green day today, okay? And this one opened right down here at 33,931. You can see the price right here. So 33,939, and it rose, let's look percentage wise. This was today. It went up about 1%, which is actually quite a bit for the Dow. The Dow doesn't move that much. So it went almost 1 full percent or 299 points today, somewhere around there. So it was a pretty positive day for the Dow today. And this is the movement just for today. And you can see it went up a little higher, but then by the end of the day, it closed out. Okay. Additionally, this is 24 hours for one candlestick. I can break it down and get into like, show me a candle for every 4 hours. So now you would know that 6 of these is 1 day, right? So the day started 24th right here in this candle. So this is the first 4 hours, and then this is the next one for the day. So you get 2. And you can keep going smaller if you want to. Now I'm looking at it, every single one is 1 hour, and when you're trading, you can go even down to 5 minutes. Now look, each one is 5 minutes, and you can see really how it starts moving up and down. This is the opening of the day this morning at 9:30 a.m. You can see here at the bottom. Here at the bottom, you will see the date and the time. And then on the right-hand side over here, you'll see the price. So you see that the price opened here, it went up, down, and then went up, and it kind of held up here, and we closed around right here. And that was the day broken down by the 5 minutes. So what this does is it allows a trader to kind of really monitor what's going on with a particular stock and view it. And it's just as simple as, once you know how to read these candlesticks, you now know that the price was going up, price is going down, price is going up, and this is in 5-minute increments. But if you were looking at a day, for the day, we were positive green. We went up this, and this whole day we went up this amount. Any questions with candlesticks?
Could you talk about volatility?
Yeah, we're going to get into, so let me just show a couple more things. We're going to talk about volatility and then some of these other concepts.
Cool.
But I just want to make sure that you guys can view this. So let me be very practical here. A great site is tradingview.com. It's free. You can open an account, and then you can come here and search for any stock you want, any crypto or any stock that you want, and you can check out their chart. So if I wanted to see Apple, I can type in Apple, there it is. It's on the NASDAQ exchange. Just remember, that's the store, right? It's sold in the NASDAQ. So I click on it, and this is the Apple chart for the day. Apple went down today. It started at 134, and it went down to 133.35. And it's dipped a little bit even below in that day. At some point in the day, it dipped all the way down to 132, but it actually closed here. So, but you can also see very quickly, let's look for the last, since June 3rd, would you say Apple's in an uptrend or a downtrend? Just really quickly, just looking at this chart, what would you guys say? Up or down? I can't hear. Veronica?
Going up.
Like up.
Up.
Up, absolutely. So if I put the percentage here and track it, it's actually up about 8% in the last 25 days. I'm tracking from this point on. And I can quickly just zoom out, and you can see you know, coming back to June 20th, the price was down here at $80. June 20th of 2020. So since that till now, that's 65% increase since last June, right? And you can just keep zooming out and see that Apple has been climbing for quite some time, right? In 2012, it was $19. You know,
Whew.
16 bucks. So if I go here and track a percentage return, you're looking at 697% on your money return, which is really high, right? So that's kind of how you kind of track these things. But before I get into, I want to show you this, because a lot of people say the market is volatile, and it absolutely is. It moves up and down a lot, right? But since we defined that the Dow is a great representation for the market, how do you think the US has been doing over time? Let's take a look. This chart goes all the way back, guys, till the 1800s. So the Dow Jones is one of the most popular index funds in the world. How many remember the Great Depression, or you learned about it in school? Anybody?
Yes.
Do you remember what year that is? Yes, Micah, the Dow is US companies.
Okay.
The Great Depression happened in the, you know, late 20s or right around the 30s. On this chart, it's right here. I don't know if you guys can see it. This is the Great Depression right here.
Wow.
That's how tiny of a bump it looks compared to what we're doing here. So let's zoom in there because you're not gonna be able to see this. So let's look at this, what actually happened here. And here it is. So that means, so this is 1921. It was around $64 per share of the Dow Jones, 64. And it climbed up all the way to 386, okay? And then it crashed from 386 all the way down to 40. Okay, so that's a pretty significant drop. Let's chart that. It's about a 90% drop, right?
Wow.
So if you had $1,000, you now have $100, okay? So let's get into this really quick. You don't know what's happening in the future. All you know is you're right, let's say right there. Here, since everything you buy, the next couple days it goes up, the next month it goes up. I'm looking at a monthly, by the way. So every little wick represents what? 1 month now, because I'm looking at a monthly chart so we can see all this over time. So if you've been buying and it's going up and it's going up and it's going up, what do you think if anybody that bought right here, do you think they're gonna think it's gonna go up? Absolutely, right? They've been on just, you know, blazing up. Then all of a sudden, as it goes up like this, you get into this euphoric stage and you see how it just kind of almost went straight up here. I'm gonna hide the red. So at this point, this is called a what market? Does anybody know? When it's just going up, 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 everybody's optimistic. We're like, yes, no matter what you buy, bull, absolutely. It is called a bull market. That's why we have this bull here. The bull market is when a period of price, a period where the price of stocks is increasing, and a sustained bull market is where you're going up for a long period of time. And so the market goes through bull markets and then bear markets, where you are mostly going down for a period of time. Okay, so the fascinating thing here that we're going to get into, the psychology and the volatility, is when things are going up, what do you think people want to do? Buy or sell?
Buy.
They want to buy, right? So as prices are going up and surging up, people want to buy. But as an investor, should you be worried or should you just buy as well? What do you guys think? Great time to buy? Cautious, I see. Worried. Patty said buy.
Don't buy.
Don't buy. That's very difficult to do when it's going great, right? Everybody's like, no, you need to buy, you're going to miss out. So let me talk to you a little bit about market psychology here. And if you guys don't listen to any of these sessions, This lesson and what we're about to learn right now can save you. I mean, let's just put this, it would have saved us a tremendous amount of money if I would have just known the principle that I'm about to teach you right now. So markets are very volatile. They go up and they go down, always. The US economy does this up and down thing, as you can see, up, down, up, down, up, down, up, down. It's just constantly going up and down. But the general trend is up. When you are peaking and it's getting euphoric, this is not unknown. It's not like the market does not know what this is. There's a psychology for it. I'm going to bring up the market psychology chart. Okay, this is a market psychology chart, and it is the psychology of a market cycle. So investing is, you're like, wait, Pablo, where are you talking about psychology? Well, it is all about psychology, guys. The market goes in these cycles, and each point in the cycle, we have a different way of how we feel. So when something is going up like crazy, 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 it's very euphoric. You feel like you're a genius. You feel like everything's going great. You got to tell everyone to buy. You know, you want to get fully invested, and everybody's just making money, right? Eventually, it cools off and it dips down, goes back up. Okay, we're okay. We're gonna go right back up. We're gonna keep going up, right? And then it goes down a little bit more. You start getting anxiety, and then a little bit more down. You're like, oh, my investments are with great companies. It's gonna come back. And then panic. Oh shoot, everybody's selling. I need to get out. Capitulation is when it's pretty much retraced the whole entire movement. So where it started to where it went back. And people at this point, guess what happens to them? Remember we talked about the investor levels?
Mm-hmm.
If you were investor level number 3, guess what happened to you? I'm 100% of the markets. I cannot afford to lose more. Interesting, right? So let's talk about this logically now since you guys are really learning how to be an investor. Should you be, if you want to make more money, should you buy things when they're low, or should you buy them when they're high?
Buy when they're low.
Absolutely. The problem with this, it seems super easy to do, but the problem is most people do the exact opposite. Let's take the current market right now. The housing market is low or high? Where would you guys say the housing market is according to this chart? This is not just for stocks. This is for any kind of market cycle. Where would you guys say we are?
Hi.
Somewhere in here?
Hi.
Thrill, maybe euphoria?
Yeah.
Somewhere in here, right?
Correct.
For sure.
Yeah. So would this be a fantastic time to buy or a fantastic time to sell?
Sell.
Sell. But however, for those that are real, as if there's any realtors on the line, what are most people doing right now?
Buying.
And are they paying top dollar? They're overbidding, right?
Yep.
They're willing to pay even premiums just for the pleasure of buying at a crazy high price. It's absolute lunacy. The reason why is because they think that it's going to continue to go up and they don't want to miss out. That is called FOMO, fear of missing out. And it is a very real thing.
Powerful.
So it's a very powerful concept. So market manipulators, market makers, these are people with lots of money that move markets. They know this psychology, and they know that the majority of people can be easily manipulated through emotion. So if you can get someone emotional feeling these feelings, then you can manipulate them out of the market or into the market whenever you want. Okay? So for example,
Oh, Pablo,
yeah,
can I share a quick story about this?
sure.
Okay, so when you showed me this chart, this chart was one of the first things you showed me. And I remember I was like, oh yeah, totally. Like, you know, it makes sense. You buy low, you're like, it's simple, you buy low, you sell high. It's literally, that's all you have to do, Nico. And it's like, okay, totally. But it is crazy how you really don't know how it is until you really feel it. And I remember the first time I bought some crypto, I bought this coin called XRP, and things were going great and lots of good news. And I bought it at a pretty high point, and no joke, 2 days later, all
Against my advice, by the way.
against Pablo's advice. I was like, oh no, like I'm looking at it and everyone's like, this is a super solid coin. Like this is gonna take over Bitcoin. Like this is the future of money, the whole thing, right? And I'm like, yeah, like it's generally low, it's like it's not a big deal. So I actually invested a lot of the money I had at the time, into it. And 2 days later, the news comes out about this coin that they're getting sued by the government, and all hell broke loose. And every time I looked at my account, I was losing tons of money. And I literally was absolute feeling this chart, panicking, and I'm like, oh my god, I need to get my money out. I'm losing it all. I call Pablo, and I'm like, Pablo, what am I gonna do? Like, did you see the news? And he's literally like, this is literally what literally what I talked to you about 2 days ago. So
And what
it's
did we end up doing? We bought.
yes, and he helped me. I literally was about to sell everything, was gonna sell it all and literally lose my money, lose my money. He's like, no, this is exactly what we're talking about. This is time to buy. And we bought low when everyone was like,
Selling.
yeah, they're selling because they're like, the government is gonna shut these people down.
Yeah.
And turns out 6 months later, you just by holding and going through it, this whole panic set part, it went up and made money on it. So this is a
About
real
three
thing,
times.
guys.
It went about 3 times.
Yeah,
from that
yeah,
point. It's like 20
yeah.
cents, and right now even right now it's around 70 cents, 60 cents.
Yeah, still up on it. So this is a very real thing, guys, and this is like the hardest part. And I still make mistakes constantly because of these emotions.
So thank you for sharing that, Nico. And I think for those of us that the 2008 cycle on the real estate, similar aspect, right? When the real estate market, I say the real estate market because it's something that we can all kind of generally feel, right, when it's happening, and a lot, it's a lot easier than those that are not into stocks. But just think about it very logically. When was the best time to purchase real estate over the last 10 years? It was that 2000 crash, right? The prices were at their absolute lowest. People were giving away homes. They didn't even want them anymore. And it's all because of this. They're panic, and it's pure fear. So there's all these emotions here, but the main emotions that drive the whole market are fear and greed. So when you're up here, you don't want to sell because you're feeling greedy, and you want to have more money, and you think it's going to keep going up. So you don't want to take your profit. You bought it here, you're now here, but you don't want to sell because of greed. And then on the way down, you get super scared because you see all your accounts drop, and you just want to end that pain by selling, which is what the market's trying to make you do. So understanding the psychology and the emotions and being calm around it allows you to really be in a different mindset, so that you say, oh, when this market goes crazy like this, is when I sell. And so that's called a green day, or selling on the green. And you want to get used to buying in the red. There's even a worse point that this anger, and that's called this depression right here. And it says right here, this is the maximum point of financial opportunity. So I found that fascinating, that the maximum point of fear is also the maximum point of opportunity. So it's like they're hand in hand. Everybody wants to buy low, but buying low means buying maximum fear. You know what I mean? And you can measure this. I'm going to show you. You can just go to Google and put fear and greed index. Just type that, and you'll get Money CNN. Click on this, and this is investor sentiment. What emotion is driving the market right now? It is 40 fear. And you can see even last week, a month ago, and a year ago, and you can even track it over time. How has it been doing over time? And this is for the stock market, and you can also do it for the crypto market. Generally speaking, fear is a good time to buy, and extreme greed is a good time to sell. When you see something at an extreme greed, more likely you're in somewhere in here, probably a good time to get out, or definitely a time to rethink your strategies, right? Nothing goes straight up. So let me just show you what happened. I want to finish the story here. After this massive drop, at this point down here, when it was 40, the country went into a massive recession, and it took it quite some time. So people that say, you know what, just hold, don't worry about it, it always recovers, it'll take time. True, but it can take some time. So there's some timing to these things, because if you bought the top of this market, how long do you think it would have taken you to recover? Did you recover? 100%, but how long did it take? Let's look. It took 9,223 days. November of 54, it got back to 386. So this entire time from here, August 29 till the 54 is when it recovered. Now, you would think that nobody made money on this, right? Absolutely not. A lot of people made a ton of money. Anybody that bought it here at the bottom at 40, every single share of the Dow Jones that was bought here, within just a little bit of time, you know, even 1 year, they already doubled their money, you can see. So from right here, the bottom, it doubled in their investment already right here. It started doubling and tripling within a few years. So buying the bot versus buying here and then holding and not doing anything, right? So if you bought it up here at the top, you're at the top of the market and you made a mistake and you bought really high and then it drops, what are you supposed to do? You were supposed to buy at the bottom. And that brings your average way down so you can recover. If you don't do that, you may be holding on for quite some time, is what I'm showing here. In this case, it would have been about 20 years. Now, long term, absolutely. Look what ended up happening, guys. Look at this chart. I mean, this is even ridiculous, right? It just keeps going and going to where we're at now. So every one that was worth 40 is now worth 34,000. So entire generations of families got wealthy because there was a lot of wealthy people that know this about markets. And when it was bottom like that, they went in heavy with their cash and it sustained their family for generations and generations. I think we did the math earlier, right, Nico? Like,
yeah,
I think $10,000 was something like 8.5 million. Every 10 grand you invested was 8.5 million, you know, now. So pretty crazy returns. And you can see all the recessions right here. Here's the 2000 recession that was so significant. The 2008 drop, right, that we all experienced. That was a massive drop, and it went from 14,000 down to 6, about a 60% drop, right? This was that 2008 crash. Look what's happened since. From 2009,
moonshot.
Just one massive moonshot up here. COVID right here, immediate recovery, and back up to 34,000 from 6. 444% if you put your money in the stock market over the last.
And that's the safest play. That's like not even risky.
This is not very risky because basically the entire US economy would have to just collapse. And even if it does collapse, as it did here and here and here and all these other ones, it recovers with a fury every single time over time. And when it does drop, what should we be doing? We should absolutely be buying those drops. And this goes for not only for stocks, it goes for real estate, it goes for other things. So Mike is saying, is it time to sell everything? Yeah, in a sense, it is a great time to sell certain assets. Depending on where you got in, you may be earning dividends and different things that you don't want to sell. But yes, if you were planning on swing trading and doing different types of investments, as it is a fantastic time to sell, and there are always times to enter and exit the markets. So hopefully this gives you guys an idea of just a general overview of how the market works, some general psychology of fear and greed, and some basics about charting. If you guys are interested in this and learning about this, it goes very deep. There's charting, there's ways to predict where things are going to go and good times to purchase or not. There's all these indicators you can load to tell you where is a stock really high? Is it a good time to buy? Is it low? And so you can see that we're very high here. On my indicator, when this is low here, that indicated that the stock price is at a good time to buy. And you'll notice anywhere that I see that was a good time to buy. You see that? So coming here and looking at the indicators gives me a lot of information, right? This is called being overbought. It means we are overly extended to the high side. And you can see that we do go up and down and up and down. And generally you want to be buying in these low areas, right? So there's all kinds of stuff you can look at to make yourself a better trader and look at patterns and everything. If you're interested in this, we are going to have experts teach this. I'll teach the very basics of it so you guys are familiar. Get your account set up. And then we're going to have some stock experts, crypto experts kind of walk us through. And I think there's even an opportunity to trade together if you guys want to take that, you know, like do these little challenges where we put little amounts of money in and we can trade in. And you don't need to have a lot of amount to trade. But I want to stop right here and then answer a few questions. I know we're at time, but you know we always give like 10 or 15 minutes for questions.